The bulls are back. Let's kick the chart show off with the S&P 500. We're looking at the breadth. This is the percentage of S&P 500 stocks above their 50-day moving average. Now, what's important to understand about a breadth indicator is when it's trading above its 50-day moving average, it's considered bullish. Below, it's considered bearish. And we were in deep, weak breadth position down here at 25%. And as I mentioned over the last couple of weeks, when you get down to these levels, people will buy just because there's so many stocks in the S&P trading below the 50-day moving average. They're going to look for a bottom, and you can see they were buying this whole thing all the way down, finally gained some redemption over the last 4 trading days, and that drove the percentage of S&P 500 stocks above their 50-day moving average up to 56%. So traders are looking for this, and if you're a trader, that's exactly what you want to see. Now, how about the 200-day moving average? Because if you're below the 200-day moving average, you're considered to be in a bear market. So notably, what we see is a percentage of S&P 500 stocks above their 200-day moving average is just over 50%. And what that's telling us is a 50-day moving average. See, we don't even need to look at a chart to know what's going on here. It's telling us the 50-day is below the 200-day, and that while there was this big reflexive jump over the 50-day, quite a bit still remains below in a bear market, according to the breadth, under the 200-day moving average. So that just tells us this is potentially a reflexive bounce, and the bulls maybe have some more work to do. Now, from a longer term picture, as we look at the percentage of S&P 500 stocks above their 200-day moving average going back in time, you have to note that this again is going to be a buying opportunity when the bulls see that this many stocks in the S&P are below their 50-day moving average. You can see all the 4 marks I've made here. They're going to buy this. Now let's take a look at momentum indicators. We'll start out with the RSI, the relative strength indicator. We note it went from an oversold position in late January and just kind of meandered along. And this isn't a sign of strength. You want it to get over 40. He doesn't have to move right away over 40, but you want to get over 40 and start building some momentum. And notice, it kind of meandered down back to 30, kind of a little oversold, and then kind of just fluttered along here without any momentum behind it, and it shot up. And that's mainly due to the breadth. But you get a positive indicator over 40, now sitting at 57, price jumping higher. How about the MACD, the moving average crossover divergence? And what do you see? The MACD, the black line, now crossing through the red signal line, giving you a positive signal. So for the moment, the traders are very excited, picking this move up. And another signal, we have Momentum Timer Pro, which adds a third layer of signals, takes in account the RSI, the MACD, its own proprietary signal, and gives you a positive buy signal if 2 of the 3 are confirming. And this is just a simple report. You get it. If it says buy, you buy, put your stop loss on, price goes up, adjust your stops accordingly, and then let the profits kick in when you get stopped out later on. 2 consecutive buy signals. Look, you don't have to do any research. You don't have to do any looking at data. Just have to get the report. Comes out during the week. It's free right now. Sign up. There's a link in the description below and in the corner. And those, when it goes paid on the list, will get a once-in-a-lifetime massive discount. How about the S&P 500 longer-term signals? So is this just a short-term run by the bulls going from oversold or weak breadth conditions, or is this a longer-term trend? Well, let's take a look at those. Price across the moving averages is bearish, meaning they're trending lower. Momentum on them is still toward the downside, so we haven't seen momentum bottom out and turn. Now here you see above the 50-day moving average, there's where you're getting that breadth indicator starting to trigger. But overall, it's kind of a mixed bag. It's just showing so far it's a reflexive bounce, but let's see what the bulls have to work with going into next week, because this is what you want. You look at the 6-month volume profile here, this red line, and what do you see? Price is now above it, so this is providing support. So going back the past 6 months, you have a lot of buyers here. That's what you want. Now notice, see, it just crossed the 50-day last on Friday, and notice got the 200-day above it, so it's got a bit of work cut out for it. The 200-day wasn't a problem the first time it broke through and got up to the 100, which acted as resistance, but the last time it barely got above the 200-day. So what do you want to see from a position here if you're trading this? Is you want to see the S&P 500 pull back a bit into the supply zone. It's done that almost every day last week. You want to see it pull back and then get some momentum and thrust higher out of there. You can look at the 10-day volume profile below. That's solid news. How about the 30-day? It's down here. So even if it pulled all the way back on Friday's move and found into this support and gave it some kind of a spring action to shoot higher, that would be fine. And even look at the 90 days still above here. So you know where the supply zones are. You know where the buyers are at. You know where the sellers are at. This is just a matter of, can the bulls keep the momentum running, knowing that 200-day moving average has been a bit of resistance right there and before. So we'll see, but they've got, again, nice volume support sitting underneath there. And I think I said 6 months before. I was on the 1-year chart. So again, lots of support, 6 month, 1 year, 30 days. This is what you want to see. Let's go on to the Nasdaq 100 and see if we have a similar picture here. Now, remember, from breadth position, we've been talking about how weak this is. And when you get down to 15% of the Nasdaq 100 sitting below its 50-day moving average, people are going to buy it. And they did. Again, just like the S&P, they bought everything on the way down, hoping that they would eventually get a bounce. They did. It shot up to 50% or 51%. How about the percentage of Nasdaq stocks above their 200-day moving average? And again, this was down to 20%. So again, people are going to keep buying this. They're looking at the breadth indicator and they see there's all these stocks being beaten up. There's got to be opportunity here. And historically, we'll look at that in a moment. There is, but note, again, despite that surge above the 50-day moving average, we only moved here about 40% above the 200-day moving average. So since 60% of the Nasdaq 100 is still in a bear market, telling us perhaps this is just a short-term bounce. And note, you get down here to the 20% signal. And in the past, it's been a massive opportunity to buy. The bulls are going to do that. Where are they hoping to take this? Now, somewhere up into the 50 to 60% range, maybe even a little higher, and get a nice, what could be a bear market rally out of this. How about we head over the momentum indicators? Now, with the RSI, similar picture to the S&P 500, we went from an oversold condition, kind of got down there again, but no real strength behind this. And then finally, a shoot higher, a numbers over 40. We got a 55 print. That's a positive signal. How about the MACD? You've got it crossing a signal line. That's a positive signal. And of course, we know Momentum Timer Pro, 2 consecutive days. 2 of the 3 for sure kicking in and triggering a buy signal. All you had to do is get the report, wait for the buy signal, set your stop losses, and go. How about the longer term signals? Similar story to the S&P 500, price trending lower, momentum still weak, but it's above the 50-day moving average. That's where things start. You've got to get across over the 50-day, and it's got to hold it. But let's look at the actual price chart now and see where the volume is on this. And note here on the 6-month chart, the volume support is above. That's not too good. So let's zoom in and look at the 90-day. See, price is still above. So you see heavy selling still well above current price. Go down to 30-day, and now you get the picture of the bottom. You can see every dip is being bought, and you have a nice bit of support. So you could see the Nasdaq pull back again. Most of that move from Friday and still be okay. And how about the 10-day volume profile? There you go. You see that nice 10-day move. There's your bottom, short-term bottom for sure. What does the Nasdaq mean? So you notice it's hitting the 50-day moving average. That is, my friends, what you want to watch out for, because you get a cross through the moving average, and then you come back up. If it confirms against the bottom side of this, if it doesn't get much momentum through here and then reverses direction, that is bearish. That's how rallies to the downside start. You get a cross through moving average, confirmation to the downside, puts the Nasdaq back into the supply zone. Here, the QQQ down around, we'll say 335, 36 in this zone right here, looking for the buyers to come back. So potential red flag, may want to just hold off on this one if you're trading the Nasdaq. Let's go on to the Russell 2000, small caps. Remember, if the small caps aren't leading, well, then the large caps will fall. But if they're starting to show signs of strength, then you've got some hope that maybe the large caps will just pull back a little bit and then follow small caps higher. How about this percentage of the Russell 2000 above its 50-day moving average, now just under 52%. We noted over the last couple of weeks that this was building strength and was just a matter of time before it popped higher. There it went. It's still not driving price way up, but notice it's moved move the needle on the percentage of stocks of the Russell 2000 above the 50-day moving average. Notice how it moved higher out of this range, but price is just not getting there. So let's keep looking here and see how about the percentage of Russell 2000 above their 200-day moving average, unchanged at around 37%. It's up a little bit, but not much. So it's telling you there was a short-term bounce above the 50-day, but still Russell 2000, most of them, we're talking almost 2/3 in a bear market. And why would people buy it? If you're trading breadth indicators, you would. This is exactly what you want to do, is you want to buy these dips here and hope you're getting a nice bottom and a rally, maybe back up to the all-time highs. How about the momentum indicators? We see the RSI building strength. Now, this is more along the lines of what you want to see. You get to an oversold condition with 2 of them in January. And what happened? It moved higher, ran into the 50, up into 50. So it got, a little momentum kind of petered out and came back down and tried again, and now it's crossing above there. So this is actually a more constructive sign of perhaps momentum building behind the Russell 2000. How about the MACD? It's confirming too. Look, we have a nice move. It's not fast. It's not racing higher, but it's building momentum. And that's telling us, and what we should see in the charts, the price charts, is that there's buyers along in here. So this is a good sign you have that. Confirmation, of course, we know 2 days, momentum time pros on all over that. 2 positive confirmations, at least out of 3. And you sign up, you'll get your next report on Monday morning. Price is bearish, but now momentum is starting to build behind the 21-day moving average. You kind of that's exactly what you want to see. You want to see the shorter term moving average start to bottom out, turn higher, build momentum above its 50-day moving average. So we got a positive cross there. Let's go take a look at the Russell 2000. We're using IWM, and notably, this is how bottoms start to form. They're processes, and you can see price comes down, buyers come in. Price rallies up, sellers come in, buyers are back near the similar level. You can call it a double bottom, maybe a triple bottom. Price comes up, and again, as sellers come in, sell it down, buyers are back around that same level. So here's the 21-day moving average in red starting to bottom, and you notice that the momentum there is starting to turn positive as it's flattening out and looking to curve higher. It crossed the 50-day and is running into the supply zone. Now, this supply zone here has been a problem for the Russell 2000. So would it be okay if prices got reversed here and then got another run? That would be great. In fact, that would be constructive if price came down a bit, maybe just under the 50-day moving average, let the 21-day curve up, give the 50-day a chance to flatten out and move higher. Absolutely, and that would be your trigger. So let's zoom in and see where this buyers are at. Notice how the 10-day volume profile is solid there. But let's look closer at the 30-day, and there it is. You can see buyers coming in here. It's just a matter of getting that price higher, and they did it over the last 90 days. It's telling you this is at least trying to establish as a bottom. The only question is, are the sellers up here? But so far, this is looking good. Again, wouldn't surprise me if it gets rejected here and comes back down into 201. If it does that, you probably want to be a buyer there looking to take this higher. So a lot of potential here. How about we go to the high yield bonds, the junk bonds? Definitely the market needs these to go with it. This is constructive. You look at the relative strength indicator, oversold in late January, oversold in February, oversold in mid-February, oversold in mid-March. Here we are, or early March, I shouldn't say mid-March. We're closer to that. And now it's back over 50. So definitely people looking to buy high yield bonds. You want to see high yield bonds rally with the equity market. You don't want to see them get left behind. How about the MACD? I'm not a big fan of this drive down and just shoot off of that. You kind of want to see more of a smoother bottom, in my opinion. But hey, you got a positive cross. And as far as Momentum Timer Pro, well, you know two of the 3 already for sure. And you can check the report on Monday, which will have all the data through Friday. Price remains bearish, momentum's bearish, now popping above its 21-day moving average. So not from a longer term perspective, you wouldn't see this as a bottom. But let's see what's going on with high yield bonds, because they need a bottom here. And certainly enough, they're in a danger zone still. They got some work cut out for them. You got down here. We talked about it. If they break down, there's the next liquidity crisis. Buyers came in and put an end to that and said, no, we're 100% behind that deal. But look at the 6-month volume profile. It's way up there. How about the 10-day? It's just, this is a very, very weak bottom in my opinion. You see the volume profile there. It doesn't have a lot of days behind it to really establish. How about the 30-day? And there you go. You've got overhead resistance now coming into the junk bond space. Looking at the 90-day, still well above. So the junk bond market's got its work cut out to validate the equity market. But hey, if the stop bulls can pull it out, I think a constructive pullback and then a move higher would really help carry this bull market if it's back in it a little higher. And with that, I'm Steve Van Metre. Thanks for watching. We'll see you at the next show. Bye now. The content of this video provides educational information only. Is not intended to advise investment or other advice. Do not to be construed as recommendation or solicitation by selling securities, financial instrument, or participate in any particular trading strategy. This video was prepared by Steven Van Metre, personal capacity. Opinions expressed in this video that do not affect the value of Steven Van Metre Financial.